Welcome to Sales Tax and More, your go-to resource for all things state tax related. Now, here is your host, Michael Fleming.
Hi, everyone. Mike Fleming here, founder of Sales Tax and More, and today's co-host of the Sales Tax and More podcast, where we talk about everyone's favorite topic, which is, of course, sales tax. Today, my co-host, Ellie Moffitt, will be interviewing me about e-commerce sellers and what they should be doing today. Where, it's 2 years post Wayfair, what are their responsibilities? What do the states want them to do? But before we get started, I'd like to introduce you to Ellie.
Hey everyone, it's really great to be here. And yeah, we're talking about everyone's favorite topic, like Mike said, sales tax. And before we do that, I'm going to do a quick introduction for Sales Tax and More. So Sales Tax and More is a full service consulting and solutions firm. We have a really great team here of experienced tax professionals who are very dedicated to fulfilling any of your state tax or related needs. So we do a lot of sales tax returns, sales tax registrations, consulting, research, and like our name states, more. If you have questions about our services or wondering if we do something, we will give you plenty of ways to reach out to us, and we hope you do so. So Mike, gonna jump right in here to our first, to my first question for you. So do e-commerce sellers need to be concerned with sales tax?
Well, Ellie, you know what my favorite answer is. It depends. And we've got a real dichotomy going on here. If you sell only on a marketplace, like an Amazon or an eBay or an Etsy or Walmart.com, the future looks very bright going forward because you don't have to worry about sales tax in most states because the state has mandated that the marketplaces themselves collect the tax. And once the marketplace begins collecting the tax, you don't have any further responsibilities. There are some exceptions there, but for the most part, that's what it is. Now, for those who are selling on a marketplace and maybe a brick and mortar location or on a site like a Shopify or BigCommerce or a WooCommerce, or your own website, these are not marketplaces. So it's actually gotten more complicated and more confusing. There are a number of different reasons why you may need to get registered. One of them is economic nexus. We got to look at the thresholds. The other, maybe physical activities or that you have in these states. But yes, you actually have to be concerned with this. Even foreign sellers need to be concerned with sales tax if they're selling on more than a marketplace. And you got to know the distinction between what's a marketplace and what's not a marketplace.
So Mike, back to kind of what you were saying in the beginning of that here, are you saying that if you only sell on a marketplace like Amazon and eBay, you don't have to worry about sales tax?
Well, in general, the answer is yes, you don't have to do it, but it depends. And in this case, it's going to depend on making sure you're only selling on marketplaces. Number two, there's some states that you may want to stay registered in, like your home state. Always a good idea to be registered in your home state. For exemption certificate, resale certificate purposes, if you're shipping all of your inventory into a state like California in order to issue a valid resale certificate, you need to be registered in California. So there are 10 states like that, maybe you need to stay registered for that reason, either that, or if you're shipping all of your inventory to Amazon in California, then maybe you ask to ship it to another state, but you may have to be registered for exemption certificate purposes. The state of Washington has the business and occupation tax, which is a second tax on the sales tax form. So the marketplace is not required to pay that for you. You still need to pay that. So You may need to stay registered or get registered in a state like Washington, which has this business and occupation tax. There are 3 states where the marketplaces are not collecting yet, and that's Florida, Kansas, and Missouri. So in those 3 states, you may want to stay registered or get registered. I think that we'll see Kansas and Missouri, once their legislatures actually start meeting again, I think we'll get to see some marketplace facilitator language coming out of those states. Florida, the governor says he's going to veto it. So we may never see, a requirement for the marketplaces in Florida to collect the tax, because the marketplaces aren't stepping forward and doing this out of the goodness of their heart. They're doing it because the state's making them do it. So for the most part, yeah, you're absolutely right. If you're only selling on a marketplace, and you got to make sure that you're only selling on a marketplace, then you can forget about sales tax going forward. Now, I say going forward because states like California are still pursuing sellers for the sales tax, looking backwards. States like Washington. We tried to do a VDA for one of our clients there the other day, and all of a sudden they started bringing up notice and reporting requirements. Now they'll waive those penalties for the most part, but they're still talking about it. So if you've got past exposure, even though you're only selling on a marketplace, these states may come after you for past exposure. But going forward, in the majority of the states, there's no longer a requirement to worry about sales tax or collecting sales tax. Now, I predict the next big battle for especially Amazon sellers is going to be, and larger Amazon sellers, 3, 4, 5 million in up in sales, and I expect this to be income tax. I think that's 6 months to a year down the road. And when you are deregistering now in a state like Texas that automatically signs you up for their franchise tax, you still have a franchise tax responsibility. So even though you may be deregistering for sales tax, you still have to worry about that franchise tax and continue to pay that. And a number of states are like that.
Yeah, Mike, our favorite answer, like you said, again, it depends. So Mike, if you are selling through Shopify, BigCommerce, your own website, then you still don't have to worry about sales tax, or could you expand on that?
Yeah, actually, you have to worry about sales tax. And there's a number of different things that we got to look at. Number one is economic nexus. And, maybe you only had to worry about collecting in your own state up until this point. You didn't have inventory in the Amazon warehouses or anything. You didn't have any salespeople traveling throughout the country. You didn't have any inventory in other third-party warehouses. But now, just having a certain number of sales in a state, it could be based on dollar amount. Most common dollar amount is going to be $100,000, or it can be based on transactions. Most common transaction number is 200. Now, not every state has a transaction threshold, but in the states that do, 200 transactions is not a lot of transactions at all. And the states take this very seriously. Now, I think we need to use common sense. If you've got 200 transactions and $5 of sales, that's $1,000 in tax. Excuse me, $1,000 in sales. It's only about $80 in tax. So I think we have to use common sense. Just because a state says that you should do something doesn't necessarily mean it makes good business sense. Sometimes we're better off waiting for the state to come and find us. Now, if your sales are material, that's not a good strategy. But if you only have $1,000 of taxable sales, I mean, heck, the cost of getting registered, even if you do it yourself, there's opportunity cost in there. It's going to be more than $80. And then a lot of states, take Georgia, for instance, they're going to start you out as a monthly filer. So you've got $1,000 in sales. How much tax are you going to be paying per month? and you either have to take the time to do this yourself or you pay someone else to do those returns for you. So I think we've got to use some common sense, take materiality into consideration here. But if your exposure is material, and that's going to be different for each one of you, then I think that we should go out and get registered, whether it's because of economic nexus, the 200 transactions or the $100,000, whether it be physical nexus. I mean, even though Amazon is collecting tax in most states now, you still have a linker connection with that state because of the inventory in that warehouse. A lot of Amazon sellers are going to say, well, this is like I'm having a brain freeze. I'm sorry. We'll come back to that. But the point is, Amazon should be paying the tax there. They should be collecting and remitting the tax. But having inventory there still creates nexus in most states. Now, since the marketplaces have started collecting, there are some states that have said, okay, we're no longer going to consider inventory to be nexus creating. A state like Texas has said that. Amazon inventory. You have inventory in any other type of 3PL in the state of Texas that is nexus creating. The state of Arizona has come out and they said it's got to be self-directed. If you sent it here knowing that it was going to be stored in a warehouse in Arizona, then that's going to be nexus creating. But if you just sent it to Amazon and they moved it there, that's not nexus creating. But most states still say that if you have an inventory in an Amazon warehouse, that creates nexus. So if you're selling on other platforms, you still have to worry about that nexus being created by the inventory. Other 3PLs, I had someone say, well, this is not an Amazon warehouse. This doesn't create nexus. No, owning tangible personal property in a state, in most states, is going to be nexus creating. And an example of one that doesn't is New York. But just about all the other states, that's going to create nexus for you. And here's a big one. The physical activities, nowadays we're seeing more and more wholesale companies or manufacturers. We've seen this accelerate since the pandemic shut down a lot of businesses. They're deciding that they're going to sell directly to the public. And some of them are saying, well, I'm just going to wait until I cross these thresholds before I get registered. The problem is, once a company has nexus, it has nexus for all business channels. So maybe you have manufacturers reps or wholesale reps or independent contractors, throughout the country, and third parties can actually create nexus for you if they're helping to establish a market. You may not have worried about sales tax before because there were no taxable sales, but there's a Supreme Court case. It's called National Geographic. It's a U.S. Supreme Court case. It says the taxable activity doesn't have to be related to the nexus creating activity. So in this instance, your sales over the internet are the taxable activity, and the nexus creating activities can be the wholesale reps. So even though they're two different divisions, they're two different business channels, once an entity has nexus, you've got to collect tax on all of the taxable sales.
Thank you so much, Mike. And we are a little more than 2 years past Wayfair, which threw out the need for physical presence and gave us economic nexus. Do you believe that people are compliant?
Well, I believe some people are compliant, but I believe there's a much greater percentage that are not compliant. Avalera just did a survey. And they said that 50% of all respondents in the survey were not compliant. Now, I tend to think that some people didn't respond to the survey because they weren't compliant and didn't want to respond. So based on our personal experience, our sales team is talking to people out there. My conversations with people, I think that it's a bigger number than 50%. And, it's for a lot of different reasons. I mean, some people are just what we call nexus naysayers. They just don't believe that the states have the right to force them to collect taxes. And no matter what you say, there's a group of them out there. They all talk to each other. They're all in an echo chamber, and they say that the states don't have these rights. Well, one by one, I think that these companies are going to find out the hard way that, yes, the states do have these rights. And that all of these people who are whispering in their ears have led them down a wrong path. A lot of people tell me that Congress is going to step in and save the day. Well, I don't know about you, but Congress is pretty much a do-nothing Congress for at least the last 10 years and 15 years, 16 years, however far back you want to go. But on some topics, they've always been a do-nothing Congress. And, when it comes to Nexus, this is one of these areas. I mean, back in 1959, there was an income tax case. It was called Northwestern Cement, and Congress acted pretty swiftly. Within 7 months, they passed legislation called the Interstate Income Act of 1959, or as it's commonly called, Public Law 86-272. But when they passed this, it pretty much nullified the Supreme Court opinion at that time. But they came out and they said Nexus was so complex and so confusing that they couldn't make a permanent ruling, that this was only a temporary solution until they could form committees and do studies and talk about this before they came up with something that actually was a permanent solution. But that was 61 years ago. We still have this antiquated temporary solution. So 61 years. And if anything, Nexus is much more complex today than it was back in 1959. So if you're waiting, maybe your great-great-grandchildren might benefit from something Congress does, but I don't see any relief whatsoever coming from Congress. And even if it does come, how much damage can the states do by the time Congress finally gets around to doing something? So I don't think that you can wait for the Congress to step in here. The states are pursuing people now. And the other thing I hear is, well, there's going to be a lot more lawsuits about this. And this is going back to the Supreme Court. Well, maybe Congress does act. Maybe this does go back to the Supreme Court. But again, how much damage is going to happen? How much money are you going to owe the states waiting for that to happen, if it ever does happen? I mean, it may go back to the Supreme Court, and the Supreme Court may make it worse for sellers rather than better, or they may refuse to hear the case, or, it's neutral. So I don't think that we can be waiting on others to save us. I mean, if you've got exposure, I think the time to act is now. And then perhaps the biggest reason why companies are not compliant is a lack of knowledge. So many times our salespeople come back and say, well, I talked to this company and they said they had their accountant look into this 5 years ago. Well, guess what? The world has changed in the last 5 years. If they had the right answer 5 years ago, I can almost guarantee you it's the wrong answer today. Because with the Wayfair case, the universe has changed. I mean, companies that never had a responsibility to file anywhere but their home state, or maybe not even there if they were in one of the no sales tax states, all of a sudden have a responsibility to file everywhere. And it's not just based on whether you sell on the internet. If you're selling on the phone, if you're selling by referral, if you're selling by infomercial, I mean, this is not an internet-related issue. This is a multi-state issue. No matter how you're selling into multiple states, if you are, this could impact you. So a lot of times it's their own lack of knowledge. Sometimes it's their trusted advisors, their CPAs, their accountants, their attorneys. Believe it or not, a lot of them are still not up to this. So it's all about education. It's all about knowledge, educating yourself so that you can talk to your clients. And that's where our webinars really come in. And we have a lot of accounting professionals coming and finding out the basics of what they need to go out and talk to their clients about. And, Ellie, it's really a shame because prior to the shutdowns, the states got a little bit friendly during the shutdowns, but prior to that, they were gearing up to go after sellers for economic nexus really hard because they know the same thing that Avalara knows. Less than 50% or 50% of the people out there are not compliant. We've already seen the state of Maine, state of South Dakota really start cracking down. We've seen the state of Utah. They purchased a list of people they thought had crossed their thresholds, which are $100,000 or 200 transactions, and it was effective January 1st of 2019. So they started calling everybody. All of those things were put on hold while, the businesses were shut down. I think that these states they've already started coming back, but I think that they're going to start making examples of people left and right. And they have to. I mean, they've, historically coming out of a recession, they've needed to fill their coffers back quickly. And one of the ways they do it is by increasing their discovery efforts, increasing their compliance efforts, their auditing, their collections. And this time is not going to be any different, except that these states were already gearing up for it because they want this economic nexus. And while the states are primarily looking for economic nexus, which, if they find you, some of these states, it's greater than 2 years now, they're going to stumble across all types of nexus. And, especially independent contractors, third contractors for some of these companies with traditional businesses, that's the biggest one that trips them up. And the states are going to find that. So I think it's a real shame. I mean, we've got a perfect storm where all these bad things are going to be happening to companies out there who are not being proactive and are not taking action. So anyway, there are options out there where you can mitigate some of your past exposure if you're proactive. If not, states can go back 7, 8, 10 years or even longer and want all of the back tax, all of the penalty, and all of the interest.
Thank you. Thank you so much, Mike. I really appreciate you letting me grill you for these podcast episodes. And to everyone, if you have sales tax needs, Sales Tax and More offers many solutions and services. You can reach out to me directly at emoffat@salestaxandmore.com. That's EMOFFAT at salestaxandmore, all spelled out, .com. You can also reach out to us through our website. That's www.salestaxandmore.com. And in addition to the services that we offer, we also have a lot of resources out there for you. We have a lot of webinars that offer CPE credit. We're always pushing out content. We're staying up to date on what's happening in the sales tax world. So please follow along with us, join our mailing list, and we hope you listen in next time. Thank you so much.
Thank you, everyone. See you on the next episode.
Thanks for listening. Be sure to click subscribe and check out all of the resources we have out on the web.